Morning, John. It's good to see you on what Mr. Trump calls Liberation Day. So, the big news, and we're recording this on Thursday morning, is that there have been a series of announcements about tariffs. John, obviously, as a trading nation, Australia is going to be affected in one way or another. What do you make of this as consequential for the Australian economy?
Well, I don't see anything surprising. There's still some uncertainty around beef, which is about 2 billion US of exports. There was one comment that Australia bans US beef, so he might ban Australian beef, but it was very unclear. Also, the tariff regime he proposed, it looked to me, and I could be wrong, but I think what he was doing was adding tariffs. So when he says he's moving tariffs to a certain level, it's on top of a level which already exists. So I think there needs to be a lot more clarification. So tariffs are painful, but I suspect some of them aren't as painful as the headlines might suggest. Very, very quiet on Mexico and Canada, although he did say the NAFTA agreement was very poor, without further comment. I don't know if that's true because there's a lot of benefits flowing to America through the orders. But anyway, we'll see what happens then. But the real target was China. There's no doubt about it. He was quite aggressive there. But I'll just point out some things which struck me, apart from the beef comment, was the deficit, which he identified in $26 trillion of a deficit on ownership of assets in America with foreigners as opposed to America's ownership of foreign assets. That was an interesting number. Again, it's a Trump number, so is it true? I don't know. He did point out that the high level of American debt as an issue, which I think if you look at American presidents over the last 20 or 30 years, he's the first American president to say they've got a debt problem, which is underlying everything that the administration of America has to do to rectify the situation. They have 110% debt to GDP. They've got a massive amount of bonds rolling in my presentations and my editorials. I make it clear that America, on average, is paying circa 2% for its debt, 2.25%. The market is around 4%. So as they roll debt, there's a massive increase in interest bill. So he has to get the inflation and interest rate down. But we know tariffs push inflation up. And I guess we'll talk about it, Paul. Is this a transitory inflation or is it going to be embedded in the American economy?
Yeah. So one of the things that we've been keeping a very close eye on is the US 10-year Treasury rate, which is probably the benchmark interest rate in the world. And 10-year bonds have gone from around 4.5 down to 4.1. Isn't that saying that inflation is less of a problem and a slowing American economy is more of a problem, and perhaps the risk of a shallow or temporary recession has increased?
Look, it's very hard to understand. Economic logic says with tariffs coming, inflation will pick up. There should be a reflection in the cost of debt and the risk-free rate of return in America. It's not happening. So where the capital markets are in a state of flux, that money is flowing into America, parking itself in treasuries is a risk-free place to park, highly liquid place. That could be an explanation for it, which puts upward pressure on the US dollar as well. Or is the Federal Reserve playing games along the yield curve in America? As we said in our last meeting, Paul, you pointed out that the quantitative tightening in America was slowing down dramatically, which means that the selling of bonds by the Federal Reserve is happening at a less rate. That's bonds they bought for their QE program. So they're selling it back to the market and slowing it down. As bonds mature, it could be that they're reinvesting part of the proceeds in the longer end of the bond market and manipulating that yield. There's a lot to try and unpack there and understand. It's not clear where we sit, but your point is right. It doesn't make a lot of sense that the American 10-year bond is rallying, given the uncertainty, bar maybe there's a recession coming in America and bonds are usually a place to hide in a recession.
Yeah, and the consequences for Australia are really, apart from things like beef, where we export $3 billion to the US, and steel and aluminium. It's really more of an indirect cost to Australia via Chinese growth. We don't know how the Chinese yet are going to respond to these tariff increases, but obviously China being our biggest export market, that's where the real consequences lie. And Chinese figures have actually been quite strong over the last couple of months. So they seem to be on target to meet, if not their 5% growth target, then pretty close to it.
Yeah, but they need to stimulate a bit. But I would expect there will be a heads of state meeting between China and America. We know the history of Trump, put it out there and negotiate. So he's gone quite aggressive on tariffs against China. The leaders will meet and see what they can come up with, because he really doesn't want to have a trade war with China. If the greatest foot in the world, a low trade war, a low rate of trade, tariffs, fine. But a large tariff increase, vice versa, is in no one's interest, and particularly not for the interest of America, given the inflation consequences and the budgetary consequences of a slowdown on their fiscal situation. So I would expect that there will be an interstate meeting and some negotiation and a return down of some of these decisions. If that doesn't happen, based on history, China will do what it normally does. It'll devalue its currency. It'll push up the US dollar and devalue to try and offset these tariffs. A rising US dollar is not great for their economy. You know, it's not good news as they try to rebuild their manufacturing base. You rebuild a manufacturing base for two reasons. One is to replace imports, and also to build an export base. It's very hard to build an export base with an overpriced currency. So this is a very complicated situation. Australia sits there. We're in the Asian Pacific region. Trump did say if I read it and heard it right, he's not interested in being part of that trade bloc. I think that's a crazy decision. It's 3.5 billion people in that trade bloc. So why would you withdraw from it? But it shows you how inwardly looking he is at present. He's probably not interested in exporting. He's interested in replacing imports. We have to understand that, and which is an opportunity for export countries, you know, outside America. You know, yes, America's a big market for China, but they'll be forced to engage with other countries around the world, other trade blocs, and they will manoeuvre. They might not be able to fully offset it, but they will do as much as they can. And China's great strategy, as we know, has been to use its industrial-based manufacturing base to hit export markets with low-cost goods, which they did, and the world accepted that. America accepted it. As they build up their per capita income to lift their standard of living in China, build a consuming base, and then redirect their manufacturing to supply themselves. You know, it's almost like America has realised that's not a bad strategy. We too should do that. The problem is they're starting from a very high cost base. It's not the same opportunity.
So, John, the other big news in Australia was the RBA announcement to keep interest rates unchanged on Tuesday afternoon. I watched Governor Michelle Bullock's press conference at 3:30, and I interpreted the tone at the RBA as quite dovish. I think the next, obviously they kept rates unchanged. Rates won't be reduced before the election on the 3rd of May, but the next meeting is the 20th of May, and I'm pretty sure that they'll reduce rates at that meeting. What are your thoughts about prospects for?
I think, given what's happened this morning, Paul, it's almost a certainty. And the question is where we'll get to in quick succession. It's going to be interesting because our cash rates won't move in unison with American cash rates. I think the Federal Reserve is the big unknown. What do they do in this situation? Do they cut, predicting a slowdown of the American economy, or do they sit there and say, no, we think inflation's coming through, we can't cut? They're in a world of pain over there, and obviously the Federal Reserve and Treasury don't get on in the administration, so that's an interesting. From Australia, I think we're looking at 2 interest rate cuts pretty quickly. That's relief. That's cost of living relief for the mortgage bill. That'll stimulate the economy if there's any risk, external risk. But it also puts pressure on the Aussie dollar, which brings imported inflation back in play without doing what is proposed by the Liberals, I guess, in terms of getting the petrol price down and the Labor Party getting the energy price down. I think both sides and the Parliament of Australia, whoever is the next government, they have to get the cost of living down in this uncertain environment and not fall into an inflation trap as America ignites inflation.
I'd like to turn to valuations on the share market. So we've just completed one of the worst quarters in terms of share market movements in probably 3 years, since 22, I think. Most markets in March were down around 5, 6, 7%. The question is, are we now at an appropriate valuation? So the US market started 2025 on a multiple of about 22 times. It's now down to about 20 times. In Australia, we were on 18 times. We're now down to 17 times. If there's a prospect of a slowdown in the US, we're going to see earnings forecasts revised downwards. Are valuation multiples at appropriate levels, or do you think they have further to contract? And should people be cautious about buying into this period of weakness, or is now the time to accumulate good quality stocks?
Well, if you're going to get opportunity, the sentiment driven by the American stock market will not be positive this year. I think there's going to be quite a negative sentiment shift. Unfortunately, the Australian stock market reacts excessively to the American stock market. Now, that says something about the quality of the capital market in Australia and the obsession with America, which when you look at our trade account, you just wonder why. Why are we so obsessed with it? Anyway, I take the view that there'll be pockets of value, and I think indexing is going to be flawed in Australia this year. I think it works when it works. I think this is a year where it won't work. I think stock selection is going to be very important. Nimble stocks which can adapt quickly in this world environment will do well. If I'm right, and we get a bit of a jolt to the Australian dollar, so companies which are trading in offshore markets, not necessarily America, but other markets may do well. I think interest rate relief is going to come, so it gives you some confidence at the banks. If there was pressure appearing in the banks lending the mortgage bill, there's probably relief coming there, which could revalue banks. But we're not talking a cheap market. No, that's the problem. It's not a cheap market. And I go back a long way. I think some of the viewers go back a long way. Banks were traded 6 and 8 times 20, 30 years ago. But we have a situation now where they're double digits and they're growing slower than they've grown in the past. So I just think it's up to our equity team to pick the right stocks. I think there's trade the market a bit. I don't think you can passively be involved in this market. If you've got a set long-term portfolio, that's fine. I'm not talking about that, but I think from a active equity thought process, you can't buy in this market and forget. You've got to be actively managing it and looking for opportunity. And I think there's going to be a lot of opportunity as these tariffs roll out and the twists and turns, which I think are going to happen, will occur.
John, I get a lot of feedback from viewers that they are interested in our views on the banks in particular. So I just want to drill down a little bit. It was quite extraordinary last week watching the market selling off 140 at one stage, 125 points, and yet CBA went against that trend and went from $148 to 150. With the prospect of interest rates coming down, do you think that perhaps one of the reasons banks are seen as a safe haven for investors because of their yield? I mean, the dividend yield, yeah, it's lower than it has been in the past, but they really are now offering quite attractive, fully franked dividend yields, and maybe that's why the banks have held up so well. What's your view on that theory?
I think it's right. Look, the banks aren't dynamic earnings growers. There was a cloud hovering as the central bank lifted interest rates up, and we went through that period where fixed loans went to floating, and there was a bit of a jolt to the mortgage belt. We've come through that pretty well. I mean, surprisingly well. So the banks have come out the other side. Now it's about the question of interest rates. And as I just said, I think it's clear that we're going to get interest rate cuts in Australia. The central bank, given the uncertainty, will definitely do that. They'll be watching what the government does. This is why it affects a lot of nonsense regarding cost of living relief. It has to occur. And the economic community, the commentators need to pull their head in. Australia can run a deficit budget if it's designed to drive down the cost of living so we don't get cost imposts coming through and wage increases. This is why the Fair Work decision and the Labor Party and now the opposition on Green to wave through a wage increase. Everyone wants to increase wages for low-income earners. But for God's sake, we want to increase take-home pay after tax. Get the tax rate down and get the take-home pay up, and don't put cost pressure in the economy. It's very important as we have these tariffs around the world. So I take your point. I think the banks are looking more interesting given that interest rate cycle, but Australia suffered greatly by lack of, real thoughtful leadership in this country and a pretty poor economic debate. And I know we're going to wind up, but maybe one point that Trump made this morning, which resonated with me, was about the lack of responsibility taken by leaders and bureaucrats. He was talking about America, and he was talking about, the country's made some very poor decisions in the last 20 or 30 years, and we're wearing it. And to his point, no one takes responsibility. And he was really talking about the free trade agreements which have worked against America. I don't think they've worked as badly as he says, but it has helped China grow aggressively, and now America has to readjust. Fine. But then I come back to Australia, and it's the same argument. There's been decisions made in this country by leaders and bureaucrats, and you can think energy, the cost of energy in this country, the cost of petrol, the lack of housing, the poor housing affordability, the healthcare which has declined, the education standards which are declining. Who takes responsibility for that? So I think it's an interesting message that Trump has said, and it's about time Australia looked at itself. It's an unbelievable opportunity now being presented to us in the Asian region. Let's look at how we can grow sensibly for the benefit of the whole community and stop this nonsense about 3-year election cycles and just buying votes and not thinking about the big picture. It's not going to happen overnight. I know I'm dreaming. The next 4 weeks is full of nonsense with the politicians, and that worries me.
Well, we will have to end it there. A lot to think about, John. Thank you so much, and we will see you again next week.